Will the market go up or down? Should you lock in or float? Find out this and more with Master of the Markets, hosted by Barry Habib of MBS Highway. Brought to you by Paramount Residential Mortgage Group.
In today's mortgage environment, providing our wholesale community with the best combination of product, pricing, technology, and service is paramount to their success. PRMG, built by originators for originators.
Welcome to another edition of Master of the Markets. I'm Barry Habib at MBS Highway. It's created exclusively for NMP TV, and it's brought to you by our friends at PRMG who are working for your best interest. I want to talk about last week's number on the unemployment benefits because I think it's very important. So when we take a look at the numbers that are coming out, they're a little bit difficult to parse through because there are new categories now of people receiving assistance. Let me first say this, that when you look at the numbers just on the surface, they're not that great, okay? This far along, we're still seeing 1.3 million people filing for unemployment benefits for the first time. So we're supposed to be coming back to work. That's about 7 times greater than what we're accustomed to. But, while that number is already, disturbing and alarming, yes, it's true that it has come down from some of the most horrible levels that we had seen when we were on total lockdown, but it's still a very big number. And get this, there's something out there called Pandemic Unemployment Assistance, PUA. And this PUA accounted for nearly 1 million more people receiving benefits. So while we're supposed to be at a level where the unemployment benefits are coming down, they have been persistently near this when you add the PUA, over 2 million people a week filing for benefits. Now, continuing on this, when you add the PUA, get this, 32 million people are claiming some sort of unemployment, or receiving rather, some sort of unemployment benefit, and that represents 20% of the labor force. So does that mean the unemployment rate is 20%? It's hard to tell because the numbers are a little bit difficult to parse through all the categories, see where there's overlap. However, I'll tell you this, it's a lot harder than the government's report, according to the Bureau of Labor Statistics, at 11.1%. Even they say it should be more like 12.1 because of misclassifications. But it makes you think when PPP money runs out, when this PUA money starts to decrease from $600 a week to $240 a week, which it's going to happen. Now, they may extend these things, but what starts to happen? Already we know at the end of August that there will be, and get this, is a crazy number, and it won't happen where all these people will suffer this, but 20% of renters may be in a position where they qualify to be evicted. That's an enormous number. Like I said, not everybody's going to be evicted, but it just shows the stress that we will see. Now, landlords expecting those rents to come in, if those people continue to be late, they may evict them, they may not evict them, but in either case, the landlord doesn't appear to be receiving rent. And all of this is just kind of piling on. We really, really need a cure for this, or a vaccine or a really good therapeutic for this virus, because as we stretch this out, I think more and more weaknesses within the system might be exposed. And what does that mean for housing? What does that mean for interest rates? Well, housing has been really strong. We told you it'll really come back strong as the initial release of energy and people's desire to get out of apartments kind of starts to show up. And we're seeing that. Single families doing really, really well. But it will simmer down. It has already started to do so. And while the housing market's really strong, it's not immune from a protracted or prolonged period or risky period where people are not working. And remember, getting people so that they can actually go to work because their kids can go to school is a whole other aspect of this dilemma. So it's like a Rubik's Cube. Every time you turn one way, it does have impact and effect on others. And there will be a greater disconnect between the 10-year Treasury and mortgage rates. Now, we had made some really good predictions on the 10-year Treasury and mortgage rates, and it's pretty well documented. However, where we go from here could be a little bit different. Now, I still think that the 10-year Treasury and the 30-year Treasury will come down. I think the 10-year Treasury challenges 50 basis points and actually breaks beneath it. I think the 30-year Treasury, currently around 1.3, drops below 1%, maybe hovers close to 0.75%. I think that's very possible. But does that mean we get the same benefit and a corresponding drop in rates in mortgages? And it's important to tell your customers this. So if your customers are sitting around and losing savings they could have today because they want to wait and try and get themselves in a position for a lower rate, be a little bit greedy, don't count on it in its entirety, because while it's very highly publicized that rates, dipped under 3%, 2.98% for the week, it does include a little bit of points on that. So it's really closer to 3 1/8. But when we take a look at those extraordinarily low rates, consumers are going to be tempted to want to wait. But the problem with that is that you could see a drop in treasuries and it won't correspond to mortgage rates because lenders are, as you know, I don't have to tell you, at very high levels of capacity. And when you take a look at the incentive to want to try and drive rates a little bit lower to influence more business in the door, at least at the present time, the appetite's not that great for that. So you could see a decrease further in treasuries and then a lag or maybe no movement at all in mortgage rates. Now, we do have to worry that if we do see a period of time where there could be some fears of inflation because you do get a demand spike and supply's not there to meet it, it's possible that you could see little blips where interest rates could go up too, so your client shouldn't wait for that. But overall, here's the big point, is that there comes a point in time where there might be a disconnect. If treasuries continue to drop, it's because the economy is not coming around or there's deeper concerns about the economy. And when there's deeper concerns about the economy and the job picture, there may begin to be a premium of risk of repayment that's affiliated with mortgages. Remember, treasuries are backed by the full faith and credit of the U.S. government, so they are theoretically risk-free. We can choose to believe that if we want to or not, but that's the theory. But mortgages do have a consumer paying them, so therefore it's a little bit different. It's not the same as the U.S. government backing it, and the consumer paying it has a lot to do with the job market. Now, so far so good. Delinquencies, while spiking a little bit last week, are still pretty darn low. If unemployment increases, remains very persistent, assistance from the government starts to either wane or run out or changes so the consumers aren't receiving it, we could see a position where treasuries go down but mortgage rates go up. We're not there yet, but I want to kind of prep you for this concept because you should be talking to your customers about this so that they don't sit on the fence and wait, or they don't see treasury rates going down and demand that you give them a lower rate. But we've got some really great tools in MBS Highway to help you with this, to help you with the evaluation of that. I think you should investigate it. Certainly get a free trial. And by the way, we perfectly timed the rate lock last week. Just rode it all the way up, bang, top of the market, locked, and preserved those gains, and then rode it back up again. I think you'd be wise to take a look at MBS Highway. Just make yourself, your referral sources, and your clients a lot happier. Hope you have a great week. Bye-bye.
PRMG continues to provide our wholesale partners across the nation with better technology, better product, better pricing, and better service. Our nationally recognized brand is more than just an image. It is a symbol of integrity. PRMG, built by originators for originators. Be sure to click on the link below for your free 30-day MBS Highway trial.